Hey everyone, welcome back to Corporate Decoder, the place where we unpack the jargon in big companies' financial filings so you can see what's really going on. This time we're diving into General Dynamics' latest quarterly report, and let's just say they're seeing some interesting shifts, especially in their defense business. Let's jump straight into the numbers. For the 3 months ending in June 2025, General Dynamics brought in a hefty $13 billion in revenue. That's up from about $12 billion a year earlier. And for the first 6 months of the year, revenue hit pretty close to $25.3 billion, a solid increase from $22.7 billion in the same period last year. Looking at the product side of things, sales were about $8 billion for the quarter, up from $7.2 billion a year ago. For the first half of the year, product revenue was nearly $15.4 billion, a significant jump from $13.3 billion. This growth is coming from a couple of key areas we'll look at later. Now, earnings. Operating earnings, which is what they make from their main businesses before other costs, came in at over $1.3 billion for the second quarter. That's better than the $1.5 billion they made last year. And for the first 6 months, operating earnings were almost $2.6 billion, a healthy increase from $2.2 billion. That translates to an operating margin of 10% for the quarter, a nice tick up from 9.7%. For the first half of the year, the operating margin improved to 10.2% from 9.7%. This shows they're becoming more efficient in how they run the business. Let's break this down by segment. First up, aerospace. This is their business jet division, and it's looking strong. Revenue for the quarter was over $3 billion, up from $2.9 billion. And for the first half, it jumped to $6 billion from $5 billion a year earlier. That's a huge 21% increase for the half year. Part of this strong performance comes from more planes. They delivered 74 aircraft in the first half of 2025, up from 61 last year. And the operating margin here is also looking good, hitting 13.7% for the half year, up from 11.4%. This segment is really carrying a lot of the company's growth right now, especially with the new G700 jets entering the market. Next, Marine Systems. This segment, which builds ships and does repairs, saw revenue soar by over 22% in the second quarter to $4.2 billion. For the first 6 months, revenue was almost $7.8 billion, up 15%. The big driver here is US Navy ship construction, which saw revenue jump by over $800 million in the quarter and over $1 billion for the first half. This is mostly due to more work on their Virginia-class and Columbia-class submarines. However, their operating margin here is still a bit lower at around 7%, and they're citing supply chain issues as a reason. Moving on to combat systems, this is where they make tanks, weapons, and other fighting gear. Revenue for the quarter was pretty flat, about $230 billion, but for the first 6 months, revenue did tick up slightly to $4.46 billion from $4.39 billion. Within this segment, weapons systems and munitions revenue went up mainly because of higher demand for artillery products. The operating margin here is actually quite good, over 13%, and it actually improved a bit in the first half of the year. Finally, technologies. This segment includes IT services and things like communication and cyber systems. Revenue for the quarter was nearly $3.5 billion, up 5.5%. For the first 6 months, it was $6.9 billion, up 6.1%. The growth here is mainly driven by IT services, which saw a boost of $147 million in the quarter and nearly $350 million for the first half. The operating margin in this segment is around 9.6%, which is pretty good and slightly improved for the first half. Now let's look at the backlog, which is basically the total value of work they have lined up. On June 29, 2025, their total backlog was a massive $103.7 billion. That's up from $88.7 billion. That's up from $88.7 billion just a few months earlier. The Marine Systems segment is a huge part of this backlog with over $52 billion. This shows the strong demand from the Navy for their shipbuilding programs. The defense segments overall have a very robust backlog, which is a good indicator of future revenue. Looking at their financial health or liquidity, they had about $1.5 billion in cash at the end of the second quarter. What's really interesting is their cash flow from operations. It was $1.45 billion for the first 6 months of 2025, a big jump from just $536 million a year earlier. This strong operating cash flow allowed them to generate $1.1 billion in free cash flow in the first half of 2025, compared to only $176 million last year. Free cash flow is the cash left over after they cover their essential operating costs, and it's a great measure of how much money they have left to reinvest or return to shareholders. Speaking of shareholders, they're also paying out dividends, and they increased their quarterly dividend to $150 per share. They also bought back nearly 2.5 million shares in the first half of the year, showing they are returning cash to investors. So now, looking at these results more broadly, General Dynamics appears to be in a strong position, especially with the defense business booming. Their aerospace segment is a star performer, delivering growth and improved margins. The defense segments, while facing some lingering supply chain issues in marine systems, are benefiting from strong government demand and a massive backlog. The increase in free cash flow is particularly encouraging, showing they are managing their business efficiently. However, the company does have significant debt as seen in their notes, although their financing arrangements seem to be managed well and they are in compliance with their covenants. The legal situation mentioned involving naval architects and marine engineers is something to watch, as it could potentially have a material impact depending on the outcome. Overall, General Dynamics seems to be navigating a complex environment effectively, with strong demand in its core markets. The company direction is solid, driven by defense spending and their growing aerospace business. A key opportunity for them lies in managing those supply chain challenges and continuing to innovate in their product lines. Alright, that's our breakdown of General Dynamics' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions and analysis. Thanks for watching. See you next time.